On today's hot sheet, I'm discussing the best long-term investment according to Americans, Freddie Mac's housing outlook, and weekly unemployment. Today is Thursday, May 30th, 2024. I am Byron Lazine, and the hot sheet starts now. Welcome into the hot sheet. Let me know in the live chat which market you're tuning in from. It is the only 24-hour look back on housing on the internet. We do this every Monday through Thursday, 9:30 on the East, 6:30 on the West. Hit the thumbs up and subscribe if you're new to the hot sheet. A lot of new people have been finding the hot sheet lately. To share this with more people, send this to somebody who's in housing, whether they're an inspector, an attorney, a lender, a real estate agent. Send this to a friend, send this to a colleague, send this to somebody in your office, maybe an office leader. Share the hot sheet stream with them. So many of you are watching the replay. Thankful for that here on YouTube, as well as on Spotify and on Apple. If you're enjoying the hot sheet, love for you to consider going over to Spotify or to Apple and dropping us a review there. So many are finding the replay valuable throughout the day on those two platforms as well. All right. As we get going here on the hot sheet, this is a community and a culture of people who want to have the knowledge to change the game, agents of change, people who are impacting not only a changing real estate industry, but a changing housing market, helping serve people, meeting people with where they're at, the next decade of real estate professionals, this change agent mentality. And the best group to surround yourself with, if you're of that mindset, would be the group attending BAM Mania at Circa Las Vegas, October the 18th. Circa's venue is unbelievable. Just go type in Circa on your computer and you know what I'm talking about. They've got that big outdoor screen, the pools, all this kind of stuff. We're doing a cocktail reception for everybody registered for the 18th on the evening of the 17th at the Legacy Club at Circa. The 17th also includes an all-day VIP session if you want to upgrade to that component of the event. This is a must-attend. Right now, tickets are at the early bird pricing. If you're a BAM X member, you get 25% off of that low early bird price. So you have a particular personalized code to get 25% off of that lowest price. Right now, it's the early bird pricing, so don't wait. BAM X members, you get an additional 25% off of that. We'll put the link down below so you can check out more about BAM Mania. All right. The polls are in, not the polls for November, but the polls from Americans on what they consider the best long-term investment, the single best investment for any American. What's your guess? Maybe you could put it in the live chat. What do you think Americans said? Over 1/3 of Americans are in agreement. 36% are in agreement that there is one single investment that is the best. And in investments, you don't just have two choices like you will in November. You actually have an array of choices. You have real estate, you have gold, you have stocks, you have mutual funds, you have savings accounts or CDs, you have bonds, you have cryptocurrency included in the list. If only we had that many options come November. Not the case. But with a wide variety of options, over 1/3 of Americans were all in agreement that real estate, yes, real estate once again is the best long-term investment for 36% of Americans. This is according to a poll done by Gallup. It's a recent poll that Gallup does every single year and shows you that even in this high interest rate environment, 36% of Americans rank real estate as the number one long-term investment. You can find the breakdown on nowbam.com. We have the charts available for you easily to download, as well as all of the full details inside of BAMX for BAMX members. If you're not a BAMX member, use code HOT to get 10% off of that. Real estate coming in at 36%. This is off of 38% last year and 45% in 22. So it is trending down, but still over 1/3 of Americans believe this to be true. Stocks and mutual funds are up, surprisingly, 22% off of 15% last year. I mean, stocks and mutual funds have had a great year. We get it, but it's been a great year for very few Americans. Look up the numbers. Not many are actually in the game. So it's really reserved for few, where real estate is open to everybody. I know it's about 2/3 of people own a home, right? But that opportunity and that dream is available to all. Might take a little bit of time to get there, but it's available and it's conceivable for many more people than maybe building a huge stock portfolio or wrapping your mind around gold. Do I buy gold stocks? Do I buy gold necklaces? Do I buy gold bars and lock them up in my basement if you have a basement? Or do I buy the mining stocks? You're like, how do I buy gold? How do I make sense of gold? If you listen to Peter Schiff, one of two things will happen. You'll either buy gold or you'll go to the top of a building and stand on the roof and look down and consider your options. One of those two things will happen because he's always telling you the economy's coming to an end and buy gold. People that buy gold really believe that it's the only safe investment. Gold is pretty high up there as the best investment. 18% believe it's the best. That's off of 25% last year. So gold ranking in the top three, you've got real estate, you've got stocks and mutual funds, and you've got gold. Okay. I personally can't wrap my mind around gold. I know people like to wear watches and necklaces, and it certainly has other uses, but I don't think there's anything on this list that has quite the utility that real estate does. Variety of uses in real estate. Next on the list would be savings and CD accounts. Okay. So savings, obviously percents are up. So people are feeling better about that, up from 9% last year to 13%. Bonds are down from 7% to 4%. And then crypto is down from 4% to 3%. Crypto's been on the list for 2 years at 8% in 22, down to 4, down to 3. So crypto losing its lust, losing its shine. Now, I know gold can have shine. I don't know if Bitcoin can have shine since you can't actually touch it or see it. Be curious to know how many hot sheet people here in the hot sheet community are Bitcoin holders or cryptocurrency believers. Not saying I haven't bought crypto in my day. I just don't, I can't make a whole lot of sense of that either. Whether that's going to be a good investment or a bad investment long term. I know for sure, besides business, the best investment I've ever made has been in real estate. It's also been one that's, when you don't know what you're doing, for me, getting caught up in the great financial crisis back in 2004, 5, and 6, I lost money then. But then ever since then, I've made money every single time. One, I know what I'm doing now. I've learned the hard way. Number two, I've bought on location. I've always, since those days when I bought on bad location, now bought on good quality location. I've made money on every single real estate deal, and it's chunky money too. It's good money. It's sizable income. So I can make sense of real estate. I can use it. I know how to play in that game. Some of these other investments can't make a lot of sense of. I think most Americans can make sense of, okay, I buy a house, I live in it at the simplest form, buy a house, live in it for 10 years, and I make money, right? I mean, just look at the US home price growth by decade. If I buy a house at the beginning of a decade, based on history of the last 40 years, the last 4 decades, if I buy a house at the beginning of a decade and I wait till the end of the decade and I live in it the whole time, I have a fixed cost on my living expense with a mortgage, 30-year fixed mortgage, only country in the world that offers that. And then I sell it at the end of the decade, I make money. Okay, if I go back to the 90s, I only make 30%, but anything with a 2 in front of it, 2000s to 2010s, 2020s, I'm making upwards of over 40% on my money. At the same time, I'm paying down debt. I can make sense of that. That's easy to make sense of. I live in something, I use it, I have a fixed cost, I pay down debt, even at 7%. That's low cost to debt. When you stretch it out 30 years, low cost to debt, not low as 22 or 21. Get it? Those are funny money years, but low cost to debt at 7%, stretched out over 30, fixed cost. I'm paying that down. Can't do that with something you're renting. And then I go to sell it. I'm getting my initial investment equity 30, 40% over original purchase price, maybe 50%. I know many folks who have gained 50, 60% since a purchase they made in just 2020, right? Or even 100%. The market I'm sitting in right now, I was able to experience close to 100% gain on a property that I bought back in 2020 timeframe. All right. U.S. home price growth by decade explains a lot of the value and the belief of why Americans really are passionate about their real estate investments and the long-term value in that. Okay. Here's by income, how people feel about their perceptions of the best long-term investments. Okay. If we go to the lower income, which would be less than $40,000, 33% real estate. So 36 when you take all income categories versus 33. So drops a little bit there. The less people on the lower income can wrap their mind around owning real estate. Makes sense. It's been much more unaffordable for this group than others. Stocks and mutual funds, 14%. Gold at 23. Interesting. Okay. Gold less than $40,000. 23% of them, of the lower income earners, 23% of the lower income earners are saying gold is the best investment. Okay. Maybe gold just feels more real. I can actually get physical gold, and know that, if I needed to go exchange it, I could get cash for that pretty easily. Savings account, 20%, just having the cash. Bonds at 1%. Cryptocurrency at 3%. You go to middle income, 40 to 100,000. It's 36% on real estate. 21% is on the mutual funds, 19% on gold. And then savings account, 15%, bonds are 4%, and cryptos at 2%. This is interesting here. Upper income, 100,000 or more, 40%. 4 out of 10, $100,000 or more income earners are saying real estate is my best investment. These are often business owners, certainly people who are involved in a 401k or the stock market or buying bonds, whatever the case may be. 2% of them say, yeah, crypto. Okay. 4 out of 10, 40% say real estate's the best investment. It's a simple investment. You can make sense of it. You can use it. You get utility out of it. That might tell you something here on who you may want to be networking with if you're in the real estate business. Maybe 100,000 and over income earners, people that believe solely in your product. You want to be surrounding yourself with as many of those as possible. Just a suggestion. I'd also suggest taking this article, the notes inside of BAMX for the hot sheet show notes, and using some of this on a headline. 2024, Americans say this is the best investment, ... That could be a great email headline, something along those lines, to get your open rates up in your database and share this information. Share some of these charts. We've got these charts available inside of BAMX for all of our BAMX members, easily available. All of the show notes, all of this stuff can be copy and pasted for an email like that, or for some type of database blast. Okay. 62% of U.S. adults have money in the stock market. Okay. That's less than home ownership level. Stock ownership is highly correlated with income. 87% of upper income Americans owning stock compared to 25% of lower income Americans. So there you go. Real estate values obviously have grown significantly, but yet that was between 21 and 22, and now in the last couple of years, you've seen that decline in people believing it's the best investment, likely correlated to those high prices. Okay, so once again, though, almost consistently every single year, you see it on the chart. Gallup poll uncovers that Americans say real estate's the best long-term investment, ranking above all the others. Shout that one from the mountaintops to dispel some of those headlines making real estate look like an issue these days. What is an issue that we continue to talk about more and more is the housing market shortage, the inventory shortage. How many homes are available? How many homes are built? How many homes are coming online? Seen numbers that go upwards of 7 million homes short to meet demand. 7 million. We talked about it, I think about a month ago here on the hot sheet, that number is really probably more like 4 million. When you average it all out, it was between like 2.5 and 4 million. When you average out everybody's projections, okay, some on the high side at the 7 million, some on the low side at a million, and we kind of averaged it out, and we were looking at it between 2.5 and 4. 7 million homes to meet current demand seems off to me. We're only going to have 4 million sales this year when you seasonally adjust it. I know it was a very popular thing to say in 21 and 22. We're 7 million homes short. I have 17 million offers on this one single property. We like to live in the moment a lot. We like to get really rambunctious about what we're seeing right now, right? Agents like to say this market is crazy, which we never really want to say that because nobody wants to deal in a crazy market. This market is complicated. Can I walk you through it? This market's gone up 20%. There's complications to it, but a lot of my clients are winning in this complicated market. Can I walk you through how we're doing that? Right? Those are the type of things that a professional might say to ease the craziness. But when we're living in the craziness, sometimes we let it take over all of our thoughts. Things are never going to be different. I remember in 2006, I remember hearing home prices are never, ever, ever, ever going down. It's an impossible calculation. We didn't have calculators in our pockets then, but people couldn't figure it out. They said, this is just never going to be the case. Buy now, buy more. Take out a third, fourth mortgage if you'd like. They were giving them away like candy. We know what happened in 2007 and 2008. That wasn't the case, right? So we get wrapped up in these moments of time. Sometimes we take it a little bit too far. 7 million homes short of supply feels a little too far for me. We have inventory rising at rates we didn't see last year. Talked about it on Tuesday's show when we update inventory at the beginning of the week. This week, Tuesday, because Monday was a holiday. Inventory is going up. Months of supply are up to 3.5 months over the country. 9.1 if we're talking new housing. Inventory is starting to rack up. If you dumped 7 million homes onto this market at these interest rates, at these prices, what would happen? You'd see prices go back down. That's almost a guarantee. You'd have too much supply for people that can afford it. It's why I keep saying I just don't believe that we are 7 million homes short of supply. I believe that we're however many million homes short of affordable supply. That makes sense to me. Affordable home supply. Well, Freddie Mac just came out with a U.S. economic housing mortgage market outlook for May of 2024. It provides a comprehensive overview of the U.S. housing and mortgage market, highlighting the impact of rising mortgage rates, declining home sales, steady home builder confidence, which is still not great, but steady would be a word to use, and persistent inventory challenges, along with a market shortage analysis. So what does Freddie Mac say? Do they say 7 million or do they have a different number? Freddie Mac says the total shortage that Freddie Mac reports the U.S. housing market is short by is 1.5 million housing units. That's to achieve a balanced market. If we had 1.5 million housing units, we'd be a balanced market. Balance probably means 6 months of inventory. 1.5 million housing units short. For sale housing units short by at least 760,000 units. So now we go a layer deeper. When they look at for sale units, we're talking about 760,000 units. That put us, what we end up with on Tuesday? We're at like 590. We're about to cross 600,000 units. If you had 760,000 units on top of that, you're at 1.3 and a half million. That feels about right when you look back to 2017, 18, 19. That's kind of where we were on active inventory, for sale units. So Freddie Mac is saying we're only 760,000 units short to achieve a balanced market, 6 months of supply, where people stay on the market 60, 90 days. We get normalized. We go a la 2018, 19. So where's the rest of the units? The rest of the units are for rent housing units. They say we're still short 760,000 units. We're going to get that in the next 12 months with all these units coming online. Not sure if I really buy into that, but that's what Freddie Mac says, 760,000 units on the for sale side and on the for rent side. So 760,000 units is a lot, but that's not unattainable. 7 million, they were saying it'd take a decade and a half to get there. That feels, and mathematically in the short term, is unattainable. 760,000, I mean, we could be at, I talked about it on Tuesday, we could be at 800,000 existing homes by the end of this year. Okay? We're still building. We still have homes coming online. I mean, could we get back to 1.3 million in the next year and a half? We could. I mean, interest rates drop. You're going to soak up some inventory, and we kind of swing back and forth between having enough or not having enough. And I get it. We don't have enough right now. But to get to a balanced market, 760,000 away, not the number many lead with, which is 7 million. Balanced market to align the vacancy rates with historical averages. The U.S. needs an additional 1.5 million vacant homes, both for sale, for rent. Divide that by 2. Market pressure without adding these units, ongoing pressure on the housing market will continue, according to Freddie Mac. More outlook from Freddie Mac. Resilient economy right now. The U.S. economy has shown resilience, but higher interest rates are expected to slow the future growth. So we'll continue to monitor that. Growth projections. Lower growth rates are anticipated for 24 and 25. Okay, so for the rest of 24 and 25, lower growth rates economically. There's no recession expected from Freddie Mac. Inflation control, slower growth and weaker labor market are expected to help rein in inflation without causing the economy to stall. They're talking soft landing language there. Good news from Freddie Mac's perspective. Federal Reserve rate cut. One rate cut is anticipated towards the end of this year. So Freddie Mac doesn't expect a rate cut anytime soon. One towards the end of 24, not 3 that Jerome Powell alluded to. Mortgage rates expected to remain elevated through most of 24, 7+. It's in line with what we looked at yesterday on the Fannie Mae projections. Okay. There you go. That's those are there's a whole bunch of information here that you could pull from inside of your hot sheet show notes. They got home ownership rate. They have a decrease of 65.6 from 65.7. Homeowner vacancy rate decreased from 0.8 to 0.9. They got a whole bunch of this stuff. If you want to grab it, it's inside of BAMX for you on this housing market information from Freddie Mac. So that'll be available in your hot sheet show notes here today. Let's take a look at that weakening or softening labor market that so many point towards as being a catalyst towards lower inflation. Okay. Let's take a look. We've got our labor market report out for this week. Okay. Weekly unemployment for the weekend of May 25. Initial claims were 219,000. That's an increase from 3,000 the previous week's revised level of 216. Not a dramatic increase, but an increase. So the number's starting to creep up a little bit. Remember, we were below 200 there. It felt like for a while. The previous week's initial claims were up by 1,000 from 215 to 216. The 4-week moving average is also up to 220,000. Okay, so labor market continues to be softer. That word strong, tight that they were using end of last year, beginning of this year, no longer the case. Okay, softer, more normalized. That's going to help inflation. Here are the states with the highest insured unemployment rates right now: Jersey, California, Illinois, Mass, Nevada, New York, Rhode Island, Washington, Alaska, Pennsylvania. Largest increases for initial claims would be in Texas, Michigan, Missouri, Oklahoma, and Jersey. Largest decreases would be California, Indiana, New York, Florida, Minnesota. That's your unemployment update there. Let's take a look at the 10-year. Hasn't been kind this week. 10-year starting this Thursday morning off at 4.57. Yesterday's 30-year fixed. Highest level here in I'd say probably 30 days at 7.34. That's where we clocked in yesterday. Let me go to the 1-year outlook here. That 7.34 would have been, when's the last time we hit it? It's been a minute, huh? Boy. We had 7.37 on October the 20th of last year. Okay, so 30-year fix coming in at a higher number than we've seen for the majority of this year. We've had some big jumps. 7.16 closed last week, 7.28 on Tuesday, and 7.34 so far on Wednesday. I would expect this Freddie Mac 30-year fix weekly, when it comes out later today, to be up back over 7. So higher for longer. That's certainly the case. I wouldn't be talking about 5s anytime soon. That's your week here on the Hot Sheet. Really appreciate all of you guys. Subscribe here to the YouTube channel if you haven't done so. If you enjoy the Hot Sheet, consider jumping over to Apple and Spotify and leaving us a review there. So many of you are finding it on those platforms for the replay opportunities throughout the day. Share this with somebody who can benefit from the 24-hour look back that we do every Monday through Thursday here on the @NowBAM network. We will be back with more Hot Sheet on Monday, of course, as we kick off next week, and tomorrow, Friday, over at Knowledge Brokers Podcast, separate YouTube channel, separate Spotify and Apple platforms as well. Myself and Tom Toole, Lisa's taking a week off, are going to be uncovering everything from the past week and going deep on how you can use that tactically as a knowledge broker. That is all. Hope to see you at BAM Mania in October. Remember, BAMX members get 25% off of that price. You can become a BAMX member right now by using code HOT to get 10% off your BAMX membership. All of those links are down below. Hope you consider checking them out. I will see you soon. Until then, of course, toodaloo.